Hello and welcome to State of the Economy. Today we have with us Dr. Montek Singh Ahluwalia, Deputy Chairperson of Planning Commission, who will tell us in greater detail about some of the big economic decisions which were announced last week, and a lot more which we are given to understand will come over the next few weeks. Welcome to our show, sir. To start with, please tell us how this whole change of mood is coming about. The markets are responding very well, so are other economic agents, businesses. There is a sense that even if late, this government is doing something. Now, where is this coming from? I just wanted to understand.
Well, I think, government always had an agenda to get the economy moving. In our democratic politics, while politics is playing out, sometimes decisions may be held back in the belief that we should do a little bit more of discussion, trying to build a consensus. But I'm glad that the response is positive. I think the government was always of the view that we couldn't just leave things as they are. I mean, the fact is the global economy has slowed down. Indian economy also slowed down. It was not just an issue of the reaction to the global economy. There were domestic problems that had come up. And if we wanted to get back to, faster, more inclusive growth, there was lots that we had to do at home. Yeah. So I think we've just started the process. And I think the Prime Minister's address makes that very plain, that there's a lot to do. Some things he's just done, some things are in the works. And I'm hoping that we will see action on that, which would help to revive investor sentiment.
Probably the need today is not just to announce big bang reforms, but to do the daily clearances of projects, moving the files, and actually pushing projects in the pipeline. Now, this point has been recognized, and for that purpose, there's a proposal to form a national investment approval board, which will be headed by the Prime Minister. So do we now feel more confident that a lot of the projects which are getting caught between several ministries will come together and there's a single window clearance for a lot of projects?
Well, I'm glad you draw attention to the fact that all solutions are not going to come through what are called reforms. I think reforms are important, and there are many changes that we need to bring about in different parts of the economy. But a lot of the problems relate to implementation of ongoing projects. Yeah. And I think the Prime Minister said that probably the most urgent thing we need to do in order to revive investor confidence is to get away from the perception that these needs for clearances, etc., can just hold up projects and nothing happens. Now, I think what the proposal you're referring to has been discussed in the meeting of the full Planning Commission. We had posed the problem that, individual ministries work in silos, and the way projects are cleared, I mean, each ministry takes a silo-like approach to a clearance. We don't have a holistic approach which says, look, this is a very important project, and if it is not cleared, many other bad consequences will follow. So let's see what are the problems with the clearance and how can you give it. In order to overcome this, the Finance Minister had suggested, and we've accepted that suggestion, that maybe we should set up something called a National Investment Approval Board, which would be chaired by the Prime Minister. But the key thing in that board would be that we would need to amend the rules of business, because under the rules of business, whenever a clearance has to be given, that clearance is given by the ministry which is responsible for everything under that act. So that automatically means that clearances are handled.
So for coal blocks, for instance, the coal ministry is the final clearing authority, right?
Well, as far as coal blocks are concerned, it's the final clearing body. Where environmental clearance, forest clearance are concerned, it's the Ministry of Environment. Now, the essence of the new proposal is that for infrastructure projects, not other projects will go through the normal course, but for infrastructure projects above a certain size, that the statutory clearance is needed. We should amend the transaction of business rules that clearance would be given by not a ministry but a National Investment Approval Board. Now, that doesn't mean, by the way, that the board will not take into account the concerns of people who are looking at, how a statutory clearance should be given.
It will reconcile the concerns of people.
To reconcile different points of view, take a holistic view, and come up with a solution.
Okay.
Now, that's a proposal. It's part of the plan. It still has to.
How long will it take for this to come into place?
Well, I mean, assuming that the plan is cleared by the cabinet, which hopefully could be in another week or so.
Okay.
Still, operationally, some ministry, perhaps the finance ministry, would have to move the proposal to create such a board.
Okay.
And I mean, then it can be done quite quickly.
Quite quickly. So here we assume that long delays which were happening earlier for infrastructure projects, whether it's on roads or power or whatever, what have you, the sharply conflicting positions between, say, the Ministry of Environment and, say, the Industry Ministry or, say, the Finance Ministry, this won't occur. If there are differences, they get resolved much faster.
Yes, that's the whole idea. I mean, the idea is not to ride roughshod over the concerns of individual
ministries. So can you give us an idea as to how much, if it was taking, say, a year and a half for all these ministries to actually reconcile their views, now with this board, will it be done at 1/3 that time or less than that?
Well, I have no doubt that it will be done much faster. How much time will, some of these clearances require toing and froing between the central government and the state governments. So I think as far as the central government decisions are concerned, they will be speeded up. We will then have to persuade state governments to also act equally speedily.
Okay. So now, we coming to what the Prime Minister said in his national address, two basic points he made. Number one, he said that people should not get misled by false propaganda, as it were, about negative outcome of some of the reforms that are being announced, or he even invoked 1991. Even at that time, people said industry will get destroyed, Indian economy will be destroyed. So that's point number one. Number two, the second point that he made was that if you don't act in a crisis, then you could end up, needing money from the rest of the world, and the rest of the world is not generous to you. And he cited some European economies which are in trouble. Why did he say that?
I think he was only drawing attention to the fact that in an open economy, we are following a growth strategy which is going to require an inflow of investment. Our own assessment is that if we want to accelerate growth, and let me say there's no alternative but to accelerate growth, with the maximum effort, the additional savings that we need is not going to cover the entire need for investment. So there is going to be a gap. And anyway, that gap will be there to cover the import. The saving investment gap is more or less the same as the import-export gap, the current account deficit. Now, looking at both of these deficits, our assessment in the Planning Commission is that if you want to accelerate growth to about 9% by the end of the 12th plan period, which is what you need to do to get an average of 8.2% during the 12th plan period, then you will have to run an average current account deficit of about 2.9%. Maybe a little higher to begin with, and it becomes a little lower later on. Now, you can only run this deficit if there's a net financial inflow. We are very confident that, India, seen as a fast-growing economy, seen as a well-managed economy, seen as an economy whose fiscal deficit is under control, we will be able to attract this investment. As a matter of fact, except for China, we would be the best bet that any investor has. Sure. But at the same time, if an impression is given that policies cannot be made, if an impression is given that the effort to control the fiscal deficit will not be politically acceptable, opinions and attitudes can change, and you can very rapidly move into a situation where markets vote against you. Yes. And we don't want to be, and we aren't in a world where we are completely insulated. So what he was pointing out is that, if you allow that to happen, and if sentiment changes, it's very difficult to bring back a positive sentiment. And you see that in European countries where they're not able to borrow from the market. They have to get assistance from the ECB or the European Stability Mechanism. The lenders are insisting on high conditionality, and they're having to cut their wages, cut their pensions, etc. Sure. We don't want to be in that position. So I think rather than be forced to take negative steps later, it's better to take preemptive measures. And I think that is what the Prime Minister said. You've got to take some hard steps now. Otherwise, you'll see a collapse of growth, you'll see a collapse of revenues.
Confidence also.
And if growth goes down, revenues go down, then a lot of the programs of social inclusiveness that we want will have to be cut. And I mean, that's not a situation you want to be in.
Sure. We'll come back and discuss this after a small break. Please don't go away and keep watching RSTV. Welcome back to State of the Economy. We are having a conversation with Dr. Montek Singh Ahluwalia, Deputy Chairperson Planning Commission, on all the new initiatives the government is taking on the economic policy front. Dr. Ahluwalia, you were talking about how it's difficult to bring confidence back once
if you lose it.
If you lose it, yeah.
We haven't lost it yet.
Yeah, we haven't lost it. My question is, the same decisions, diesel price hike and foreign investment in retail, in fact, FDI in retail was announced last year in November. It could have been done then too. Why did it get so delayed? Suppose it was done then, would things have been far better?
Well, you know, the reason it was delayed was a conscious effort to build a bigger consensus. I mean, let's be clear. In a democracy, different political parties will have different views. And I think it's to the credit of the government that it listens to those views and tries to see, you know, what the different views are. The government did not actually negate the decision. They said, well, since there seems to be differences of view, let's hold back the implementation until we've done further consultation. Now, the conclusion that they came to was that several states wanted it, some didn't. And I think it's a very reasonable thing to say that, you know, retail is typically a local activity. And so if a state wants it, and there are very strong arguments in favor of FDI in retail, sure. If some states want it, the thing to do is that we'll allow it only in the states that want it, and we won't allow it in the states that don't want it. And I think that was a good conclusion that they came to. Having reached that conclusion, they went ahead and implemented it.
There is some fear that if some other state government comes to power in a state which has implemented it, and if that new government does not agree with this policy, it can reverse it. Is there any guarantee to foreign investors against that eventuality?
See, I think the FDI permission is actually being given by the government of India. And what the government has done is they've said that, look, for the states that want it, it's open. Now, I don't think that a state that has said to the government of India that it wants it can actually reverse that decision. And I think we must realize that, you know, the right to keep reversing things is actually a very negative right. So basically, I don't see that as happening. And frankly, I feel that once the controversy is over, people will see that it is beneficial. It's beneficial to farmers, it's beneficial to consumers, and it doesn't hurt the independent retailer. So my guess is that many of the states that today say they don't want it will actually come on board.
Coming back to the point you were making earlier, that you have to send out a strong signal to the world that you are an open economy and that you are following rational policies on the fiscal front, and that's what makes people invest in your system, right?
Now, but not just that, you're also doing a lot of your own investment. You need a high domestic saving. You need a positive investor climate domestically, and I think that's as important. Now, I think what I'm saying is that India has the potential, and most people around the world accept that with a little bit of effort, India could grow between 7 and 8%, and with a little more effort could do better than 8%. If we are giving that signal, and I think we clearly should be giving that signal, then as far as both domestic and foreign investors are concerned, keeping the fiscal deficit under control is a very basic aspect of macroeconomic balance. If you don't keep it under control, government will absorb too much resources, interest rates will be high, and the business environment will not be supported.
No, you're right. I agree with you on this, but I'm on the question of foreign savings that you mentioned.
Yes.
You need foreign savings to fill the investment gap, right?
Yes.
Now, you yourself have been on record that a current account deficit of 3.5% plus is probably a little worrisome, not sustainable.
Oh, absolutely. But I don't expect it to
so
be.
you need, at 3.5% to 4%, you need $70 billion of net capital inflows every year. So is that manageable?
Oh, absolutely. Let me first of all say that 3.5. I mean, we got a very. You may get 3.5 this year, but I don't expect 3.5 to continue. So I think people are going to look at the medium-term prospect. On an average, we are saying about 2.9% of GDP.
Roughly 3% of GDP.
A little less than, yes, but let's say roughly 3% of GDP. Now, 3% of GDP would be, in net terms, something of the order of $50 billion or so. Now, this $50 billion would be a combination of FDI, FII, and some amount of borrowing. Some amount of borrowing.
Corporate borrowings, etc.
Yeah. And the, government borrowing, which it does through these various multilateral development agencies. I have no doubt in my mind that volume of inflow is perfectly sustainable. Remember, earlier, we did even more than that, except that we didn't need it. So a lot of it got put into our reserves. So I think what the world is looking for is India on a growth path that looks good? And is India internally well managed? And is Indian business feeling that the business environment is supported? I think the most important thing for that is sensible overall macro policies and taking care of infrastructure constraints. I think what foreign and domestic business knows is that it is the job of the government to have a sensible tax policy, a sensible macro policy, and to deliver infrastructure. So infrastructure development is a very big part of our own development effort. I think what the Prime Minister was saying is that there is a perception, and I think that's grounded in some reality, that important infrastructure projects, especially in the power sector, have got stuck. So I think we need to get to the root of that problem.
We'll discuss the power sector in greater detail, but after a small break, please don't go away and keep watching RSTV. Welcome back to State of the Economy. We are having a conversation with Dr. Montek Singh Ahluwalia, Deputy Chairperson of Planning Commission. You were talking about the importance of the power sector in driving growth, driving the economy, which is commonsensical. Now, tell us something about the big restructuring, rationalization that you're currently doing in the power sector. I believe there's a huge commitment that you're making to revive these state electricity boards, which are running into huge losses, and some rational policies are being put in place so that in future this doesn't happen. Could you just give us,
I think
enlighten us on this?
Yeah, sure. Three things I want to say. First, it is a major success of the government's policy that we've been able to attract investment into generation. I mean, in the whole of the 10th plan period, we added only about 22,000 megawatts.
Sure.
In the 11th plan period, we added 54,000 megawatts. And in the last year, we added 22. Okay, so a huge ramping up, private investments coming in. That bottleneck that nobody wanted to invest in generation, that's not true. But we have run into two problems. First, there isn't enough fuel. The coal supply and the gas supply to these new capacities which are there is inadequate. And now there are a lot of problems to be tackled there, which I know that the government is handling. And I'm hoping that, you know, in the next sort of 2 weeks or so, some of these problems will be overcome.
And state governments have to do a lot.
Well, it's state governments, it's also Coal India, ramp up as much as possible from existing capacity, but also import to meet the deficit. Look, in the short run, there is no alternative but to import. So I think we have been trying to get some mechanism where there is an understood distribution of the burden of the import requirement. That's one part. The second part of it is really that all this generation investment is really directed at being able to sell this power to discoms. There are no state electricity board, they've all been disbanded, but the distribution company. They're a publicly owned distribution company. The problem is these companies are running huge losses. I mean, the annual losses of the distribution companies is something of the order of 60 to 70,000 crores. Since they don't put their, get their balance sheets audited on time, nobody knows exactly.
Why don't they get it audited?
I think it's just inefficiency.
It's just a culture of not getting it audited.
Yes, but that will change. And it will change because banks have begun to resist the earlier practice of simply filling the gap. The banks are saying, look, if the company is not in good shape, if the company is not breaking even, I mean, it doesn't have to make a profit as long as it breaks even. And if repayment of loans becomes questionable, then we are not willing to lend anymore. So I think that has posed the problem. What do we do with these companies? Well, we have put, I think it's going to cabinet actually today, and I hope it will be approved. Sure. It's a fairly complex system where what we're saying is, look, there's a certain outstanding debt which these distribution companies have incurred. Half the debt.
What is the amount? It's about 2 lakh crores.
Huge amount. So I don't remember the exact number, but it's a very large amount. Half the amount will have to be taken over effectively by the state government, and then they will repay it, because after all, the fact that they've run this loss is entirely because state governments have not actually ensured.
And the other half?
The other half will be rescheduled by the banks. So the banks are basically taking a bit of a hit in the sense that they're agreeing to reschedule with an interest rate moratorium and so on. That will remain on the books of the state electricity boards. I mean the discoms, but because the repayment schedule will be stretched out, it will be less of a burden, providing they improve their current operations. So
so you're prolonging the maturity of the loans, right?
But none of that is of any use if you keep making losses, because you keep making losses.
You get into the same situation again.
Therefore, the critical thing is that the state electricity boards will undertake certain steps which in our view, in the view of whoever manages the scheme, will bring these losses down. Not immediately, but over a 3-year period.
Is it true that some research firms are putting the figure at some 4.5–5 lakh crore, the outstanding debt of state electricity?
I just don't, but look, if they are running an annual loss, it'll be over 200,000 crores, that's for sure. If they're running an annual loss of 60,000 crores, and it wasn't 60 throughout, it's very easy to build up to more than 200,000 crores. Not every state electricity board will come for the restructuring. You know, what we have to do with the state electricity boards is not very different from what the European Central Bank is doing with the southern European countries. I mean, if these countries if boards have got into a debt situation because they haven't behaved well in the past, now what do? I mean, what we're doing is we're sharing the burden. The states will bear some of the burden.
With the condition that they'll behave rationally in future.
That's critical. And by the way, which is exactly what's happening in Europe also. You can't simply say, let's take care of the debt and we carry on doing what we are doing. So that change becomes very...
Tell me, Dr. Ahluwalia, how politicized is electricity tariff, say, as opposed to oil tariff? Oil tariffs, of course, very political.
Let me say, all tariffs become political, but I think it is important to know that in the last couple of months or so, at least 2 state governments have significantly increased the electricity tariff. Tamil Nadu has done it, West Bengal has done it. So the point is, if governments could avoid raising prices, they will be tempted to do so. In the case of state electricity tariffs, the burden is borne by the state government. So if you don't raise tariffs, if you believe that you can carry on investing, you can still buy power, perhaps they won't do it, but you can't. Because the financing of this is done by the banks, and banks are not willing to do it.
Sure, sure.
So you're forced to.
Finally, with all the measures taken so far and promise of more coming in regard to both reforms as well as routine sort of decision making, quickness in decision making, do you think India has averted the risk of a downgrade which has been talked about all over the place?
You know, I don't want to predict what rating agencies will do, but I think the fear of a downgrade was connected with a perception which our own press had projected too much, that no policy actions are being taken.
But as you said, also was rooted in some reality also?
It was rooted in the fact that in a democratic process, the government wanted to consult. But the belief was that this consulting will go on endless.
But the rating agencies are not tolerant of democratic processes.
Well, but let's say all that the rating agencies did was they said, we are putting you on a negative watch. Okay. So I think what the rating agencies have to ask themselves is that compared to the position 3 months ago, what is your judgment about India today? Well, the judgment about India today would certainly be that, look, it's not true that they're not taking action. They are taking action. They have taken action. Some of that action is politically controversial, and the government is obviously hoping to persuade people that this was necessary and worth taking. There are many other things we have to do, maybe not controversial, which involve administrative action. Sure. I'm sure that by the end of October, a lot more of this will become evident. So my hope is that those who felt that there was a complete policy paralysis, as it was called, sure, will change their mind. Now, you know, in the 12th plan, we have for the first time put before the country that there are alternative scenarios.
Sure.
The strong inclusive growth, which generates 8.2% growth, is scenario 1. In our view, that's what we should aim at.
Sure.
It requires taking a lot of hard decisions. Some of them will be uncomfortable, but you got to do it.
Sure.
Scenario 2 is you don't do it all, you do a little bit. Scenario 3 is you get locked into a policy logjam and your growth rate will really collapse. I'm hoping that in this debate, people realize that there are costs to not taking decision. That's the central message that the Prime Minister was giving.
Sure. So let's hope and we'll see how the mood changes and how the mood of rating agencies also change. That's all we have in this edition of State of the Economy. We'll be back again with you soon. Thank you.